G'day everyone, and welcome back to this Hidden Gems webinar series. This is in fact the last Hidden Gems webinar for the year. We will be back on Friday, January the 21st. So put that in your diary and watch out for new presentations. I'd like to thank you all for your continued participation during 2021. I think you've all helped us become, or create probably the most popular investing webinar in the market. We hope you've all made some money and think you would all agree that we've really introduced some really interesting investment opportunities and companies this year. We look forward to the markets in 2022. Who knows what will happen? Okay, let's make a start. We'll get straight into it. Don't forget to ask questions in the Q&A box provided. First up, we have Amaero International, ASX code 3DA, market cap around 58 million. 1 year return of minus 50%. The company commercializes additive manufacturing of metals and alloys technologies. Apologies there, Stuart. We have with us Stuart Douglas, who is the Executive Director. Stuart, over to you. Thanks, mate.
Thanks, Tim. Thank you, everyone, for attending. Apologies if I'm going to be speaking a bit fast. I'm trying to get through a 30-minute presentation in 10 minutes. For those who aren't aware, Amaero is a metal 3D printing company. We were spun out of Monash University through their division called MCAM, which is Monash Centre for Additive Manufacturing. And that centre is actually the world's leading institute for metal 3D printing. They've got 50 full-time researchers working every day to make 3D printing better in metals. And we're co-located with them. So that gives us access to those 50 scientists along with our own R&D staff. That means that Amaero has the largest R&D team in the world in metal 3D printing, which affords us some really nice IP and some new unique positioning in the market. Next slide, please. This is the disclaimer. I'll just let you look at that in your own time. But about Amaero, so we were established in 2013, as I said, from Monash University. We specialise in the areas of defence, aviation, aerospace and industrial tooling. We've got a lot of world's firsts. We 3D printed the world's first jet engine, the world's first aerospike rocket motor, which you see on the right there. That's a cutaway of that. The world's first flying hot parts in the internal hot parts of the turbine engines. They're flying in military aircraft today. So we're respected by those in the know, the big defence and aviation companies, and they come to us when they want to solve their problems. We have operations in Australia, in Melbourne and Australia, and also in California and USA, and they're all manufacturing operations. Next slide, please. So just some investment highlights. The industry, if you're not invested into the 3D printing sector, then you probably should be. It's the fastest growing sector on earth. It's growing at 60% CAGRs year on year. Last year did $12 billion turnover. It'll do 120 billion turnover within just another 4 years. So we'd like you to invest in Amaero, but if not, you should be investing in the industry. We've got a lot of leading technologies. We've got a series of machines, 3D printers, which I'll show you in a little while. They're the world's fastest and most cost-efficient metal 3D printers. We also have leading technologies in producing and manufacturing the metal powders that go in these machines. They're called gas atomizers. And our new atomization technology enables us to make metal powders, and particularly titanium, at under half the cost of anyone else in the world, which is really positioning us as a global leader. We also have some global expertise on our board. For example, on the powder manufacturing, Dr. James Sears. He is the world expert in gas atomization and creating these metal powders. He set up GE's powder facility, Pratt & Whitney's, Carpenter's, who are the largest titanium manufacturer in the world. So he is recognised as the world authority, and now he works full-time for us. And he's the one that's developed this new technology, enabling us to make powder at half the price of everyone else. We also have an amazing board and board advisors, including the ex-Secretary of Defence of the United States, Patrick Shanahan. Also the ex-Secretary of Defence here in Australia, Christopher Pyne. and many other really high-level leaders who strategize together to position us as a leader in defence, aviation, aerospace, and tooling. Scale and profitability, well, we're moving now from working on R&D projects, proving up the components for these large companies, and we do with 6 of the top 10 defence companies on Earth. And now we're moving into the manufacturing and the profitable part of the business, which is quite exciting. We have strong partnerships. We mentioned Boeing and Rio Tinto and Raytheon and many others, but also on the research side, not just Monash University, who are our 3rd largest shareholder, but also Adelaide University, who are a top 10 shareholder, and CSIRO, who are just across the road from us, and we work with them collaboratively on a lot of projects. In fact, our CEO, Barry Finnan, used to head up the metals divisions at CSIRO. Next slide, please. So what is additive manufacturing? Well, 3D printing. So what happens with metal 3D printing is a layer of powder is laid down on a plate, and then a laser comes in and lasers and consolidates the metal in where you're trying to build up metal, and then another layer, and it just builds it up slowly until you have a complete part. But what it enables you to do is to make things that have never been able to be made before. That's a cutaway of a Bell rocket engine there, and you can see the ladder structure in underneath. You can't make that any other way. So metal 3D printing enables you to make things that haven't been able to be made before, but also to consolidate parts. So you might now take 20 components and you just print them all in one, which saves weight and makes it safer because you don't have all of those interfaces, those 19 interfaces over 20 parts, which are risk areas. Next slide, please. So some of our key projects, I mentioned the titanium powder plant. So that's being manufactured in Europe at the moment, and we've just signed heads of agreement for a new lease, and I'll show you that facility in a little while. But this just one gas atomizer is going to produce $40 million worth of revenue. We just upgraded our earnings for that from 30 million to 40.8 million, and that's a very, very profitable exercise. We announced at our AGM that we'll be able to pay that capital cost back from profits in under 6 months. So that gives you an idea of how profitable our titanium plant's going to be, which is really just a license to scale up. We'll be able to debt fund our scaling up, and I'll talk a little bit about that in a minute. We're also working on the world's largest centre of excellence for metal 3D printing in the Middle East. We'll be building that. That's a $100 million facility. It'll be paid for by one of our defence clients on behalf of the Middle Eastern country through a defence offset deal. Fletcher's Insulation, they make pink bats that go in your walls and your ceilings, glass wool. So they licensed that off of Owens Corning in the US, and a Fortune 500 company, and they're the largest manufacturer of glass wool in the world. So when you make glass wool, they use a tool that's a round tool about yay big. It's donut shaped. They pour molten glass on the top, and it spins out through tens of thousands of holes in the walls of that. And these tools cost about $4,000 a pop, but they only last 4 days. And they've got hundreds of these machines around the world. And so we believe this is the world's largest consumable tooling project. And we've developed a way with them, in collaborating with them, to make a tool that lasts longer and is cheaper. And so we're very excited about that project, and we'll have a heads of agreement signed off on that very soon. Boeing is one of our clients, mentioned earlier. So we built a facility in El Segundo, which is called Aviation Alley in California. And we are manufacturing parts for satellites and various other programs that they have. And our plan with them is to 10x that facility over the next year or two. Gilmore Space, we announced recently, awesome Australian space company doing amazing things, really pushing the envelope. So we've announced a $1.7 million contract with them to make components for their rockets. Next slide, please. These are our machines, ranging from the little SP100 up to the brand new SP800, which is in alpha testing at the moment and will be released later next year. That's the largest metal 3D printing machine on Earth, about 30% larger than the next biggest, which is GE's offering at the Excellent 2000. So we'll have the largest range, out of any company in the world, which is exciting for us. Next slide, please. I won't spend too long on this because it's quite wordy, but short term, I've already gone through the opportunities. Medium term, which is really only 2 years, we'll be scaling out those powder operations. So as I mentioned, one gas atomizer can produce $40 million worth of revenues. We want to 5 to 10x that in the very short term, medium term, two plus years, which will really change the dynamics of our revenues. Next slide, please. So in short, because I'm running out of time, we're constructing the world's most efficient titanium powder plant, making powder under half the price of everyone else. Supplying titanium powder to our defence clients around the world because they don't want to buy from China and Russia anymore. They want to buy from allied nations. So this will be Australian titanium resources turned into powder. We also have a binding heads of agreement coming for that tooling project, the largest tooling project in the world. We're also building the largest centre of excellence in the world in the Middle East with one of our defence partners. I've talked about Boeing. One thing I haven't mentioned is our proprietary alloys. So we've got some patented new alloys, one called Hot Al, which is basically 30% stronger than the incumbent aluminium and has double the operating temperature, which means it can be used in hot parts of turbine engines where maybe nickel-based super alloys were used at 3 times the weight and much, much more expensive. So we're really excited about that one. And we have a new titanium alloy called Beta-Tite, which has 20 to 25% stronger shear strength. But the real main takeaway from that one is that it's got 5 times the fatigue life. So I don't know if you've ever sat on a plane, you've looked out the window at the wing and you see hundreds, thousands, in fact, rivets. So those rivets are all made out of titanium, and fatigue is the thing, fatigue life is the thing that they're after. Those current rivets, ours has 5 times the fatigue life. So that's a multi-billion-dollar market in itself. So we're really excited about that. I think I'll stop there. Oh, actually, just on the right there, those photos, you'll see the white section of that building, that's existing. That's our new facility that we're leasing. And then the light blue section, which is the tall section below, that's being built to cater for our new titanium gas atomization facility. And so we'll be moving in there next year, which we're really excited about. Thanks, Tim.
Thanks, Stuart. Bang on time. A couple of, for those who don't know the business, I mean, it's an impressive presentation, some big names in terms of contracts, but your share price has been pretty weak over the last 12 months. But what's the reasons for that?
Yeah, well, we're a manufacturing company, and like a lot of manufacturing companies, COVID's really hit us badly. We make machines, and we rely on components being made by other manufacturers, and they're having the same problems in logistics as well. I mean, you're booking 6 months in advance now to get a shipping container. It's hard to get suppliers to make for the raw materials to make the components, for then us to buy the components to get them in. So it really has pushed things back. With regards to our Middle Eastern project, we've had it for COVID, we've had our trip cancelled 5 times. So we just can't get over there to pick our new facility to be able to build that $100 million centre of excellence. So it really has been frustrating. We've been pushed back around about 6 months, so we haven't been able to meet those expected timelines. And I think people just want to see the revenues. But I think you can see from what I've shown in this presentation that we're at the pointy end of all of those contracts, and it is an exciting time for our company.
And you've obviously got an impressive board there in terms of dealing with some of the big names in defence. Can you talk us through the process of how long a contract takes to negotiate, be signed? You mentioned a lot of R&D. Who's kind of funding that R&D? And then how long is a contract and kind of what's it worth on average?
Yeah, well, look, I'll use the tooling project as an example. That was about $100,000 spent by our client to get us to develop a process for them, which was going to be able to 3D print that tool for them. Now, in all, that tooling contract is worth about $350 million a year. That's what they're spending a year on that tool globally. So it's a huge opportunity for us. And it's taken around about 6 months to develop the new alloy, because we've come up with our own alloy specification, which is 22% harder. 32% harder and 22% more strength under heat. So, that company's been working for 30 years to make that as hard as possible. And then through a 3D manufacturing process, we've been able to make it better, harder, and last longer. And then that will result in us slowly ramping up and taking over as much of that contract as we can.
And with your new facilities there, do you have a kind of full queue of customers ready to kind of utilise those facilities when you're at capacity?
Yeah, absolutely. And I mentioned our new SP800 that's coming out. And we've got multiple of the defence companies wanting to make large components, and they just can't make them at the moment because some of the other additive manufacturing technologies that you may have seen aren't qualified for aerospace and defence, whereas selective laser melting, which is what we deal in, is the most certified process for all of those applications. And so this will be the largest machine. So, we're talking about making large rocket components and fuel sections for canisters and a whole heap of very large parts that have never been able to be made before. So there's a lot of excitement around that.
And news flow into 2022, what can potential new investors and existing shareholders look forward to?
Yeah, well, I think the expansion of the powder plant's really exciting. As I said, the one atomizer is producing $40 million worth of revenue at high profits, and we really want to scale that out. So we'll be releasing what our plan is to 5 and 10x that. We can take 3 gas atomizers in that current new facility you see on that slide, but we are planning with our defence primes on investment to be able to scale that out further. So that's probably the single one most exciting one.
Great, Stuart. That's all we have time for. Thank you for being on Hidden Gems webinar, and we'll see you again. Have a great holiday period.
Thanks, Tim, and thanks, everyone. Cheers.
Thanks, Stuart. Next up, we have Dundas Minerals, ASX code DUN, market cap 11 million. If you haven't heard of the company, it only listed last month. That's why. The company is a precious metals and mining business based in Australia. We have with us the Managing Director, Shane Volk. Shane, over to you. Thank you.
Good morning, and thank you very much, Tim. If we could start the slide presentation. Next slide, please. And that's the disclaimer. Right, firstly, just a brief look at the battery materials thematic, which is really underpinning global commodity prices, exploration activity, and ultimately mineral discovery. Look, the chart on the left is showing what total battery material demand looks like between now and 2030. And although the absolute numbers are interesting, take note of the size of the bar in 2030 compared to 2021. It's about sort of 4 to 5 times that. And this is what the predicted growth in battery materials demand will be. And it's all driven by, on the right, energy storage installations. And this is all about the decarbonisation of the global economy. Next slide, please. Some familiar faces here, Jeff Bezos and Bill Gates, Elon Musk. And what's interesting is that Bezos and Gates, it was revealed in September this year that they had invested in the global search for battery materials by taking a shareholding in Cobalt Metals. And this really supports the whole investment thesis and the opportunity for investors. The comment below is interesting also from Mr. Musk back 12 months ago, where he implored all of us miners or explorers to produce more nickel. If it was only that easy, the deposits have to be discovered and developed first. Next slide, please. And that's what we're doing at Dundas Minerals. What we've managed to do at Dundas is secure a very large tenement position in the world-class Albany Fraser origin, just north of the coastal city of Esperance here in Western Australia. For those that are not familiar with the origin, it's home to 2 of the great recent mineral discoveries here in Western Australia, the Tropicana gold deposit back in 1995, and more recently the Nova nickel deposit back in 2012 by Sirius Resources and now managed by IGO. Look, it's a very sought after area, as you can see by all the white shapes. It's fairly heavily pegged. But it remains highly prospective for repeats of sort of Nova and Tropicana style deposits. Next slide. And just zooming in on the next slide to our tenement position, you can see we're about previous slide, please. Yep. We're about 120 kilometres south of Nova and about the same distance away from Esperance. We have 12 contiguous exploration licence, a very large 1,200 kilometre tenement position. And what the opportunity is for us and our shareholders is that all of the ground that we hold has not been explored since before the time of the Nova discovery, so before 2012. And when it was being explored back then, predominantly the exploration was gold focused or exclusively gold focused. Nova and the recent Julimar deposit, and I hope some of the viewers today had shares in Chalice, those deposits are hosted in mafic, ultramafic rocks, and our tenement package has never been explored for these type of rocks, and herein lies a tremendous opportunity. Next slide. The next slide is a gravity image. Our tenements are outlined in the white. The shaded tenements are of our neighbours. What's quite interesting is that Rio Tinto has a very large tenement position immediately to our west. To our east is Metal Hawk and Western Areas, which is a known established nickel producer. Mount Ridley mines to our south. Now, our tenement position, very typical of the Albany Fraser. It's covered by sort of 5 to 30 metres of regolith or sand and calcrete. And in our area, there's been no deep drilling. The drilling's only been down to 20 to 30 metres, 1 or 2 holes around 60 metres. So there is considerable uncertainty as to what the underlying bedrock consists of. It's just been interpreted by using geophysical data to date. Next slide. So the prior exploration, as I said, was gold focused. It used this calcrete sampling exploration model, which proved completely ineffective in our area and is in fact very ineffective throughout the Albany Fraser. So this is a model that we will definitely not be following. We'll be doing something completely different to hone in on the type of ultramafic rocks that we're looking for. Next slide. And just going through and having a look at, if we're looking for another Nova, we're looking for a Julimar, what do we have to look for? Well, as I said, mafic, ultramafic rocks. Now, these rocks are dense. So in terms of geophysical surveys, we're looking for gravity anomalies, areas of density. We're also looking for conductivity. Massive sulfides are present hosting in both Nova and Julimar. So we're looking for conductivity anomalies and magnetic. Julimar has a very strong magnetic signature. Nova has a magnetic signature as well. So these are the type of attributes we'll be looking for in terms of when we're doing our geophysical surveys across our tenements. So next slide, please. Just a quick look at Nova Bollinger for those who haven't seen the section before. It sits around 160 metres below the surface, and it has a magnetic signature, was known as the Eye previously before it was renamed named Nova. So next slide, please. And we look at Julimar. Julimar's a bit shallower. It sits around 45 metres below surface, but as I said, a very, very strong magnetic signature. And as mentioned before, this has been a magnificent discovery for Chalice, and how we would love to find a similar deposit to Julimar and Nova within our tenements, and that is certainly what we are looking for. Next slide. Now, just getting back to the geophysics, so the image on the left, or the cartoon on the left, just illustrates the type of coincidental anomalies we're looking for to try and hone in on an ore body similar to Nova or to Julimar. So in the pink, we have a magnetic, on the image on the left, in the pink, it shows a magnetic anomaly. In the black, an electromagnetic anomaly or conductivity, and in the blue, a gravity anomaly. So what we're looking for is these coincidental anomalies across a very similar or close area. And to do that, we've already started work. We've completed on the right a SkyTem electromagnetic and magnetic survey that completed already in October this year across all of the northern section of our tenements. And below that, you'll see an image of a gravity image there, of the equipment used to do the gravity survey, and that's been conducted as well. That finished also in October. So we have brand new data sets, electromagnetic, magnetic survey and gravity survey. Next slide, please. Now, in terms of gravity, this is what previous explorers were using back in 2012 and prior. Very old data. You can see it's very coarse, not very useful. If we can go to the next slide, we can look at the image that we generate from our survey. And already you can see on that image, in the very rich, dark red and pink colours, the prominent gravity anomalies or very dense packages of rocks. And these are areas that we are focusing in on now, and we're already starting to do some infill or far more detailed gravity surveys to assist us in targeting our drilling for next year in these areas. Next slide, please. This is our electromagnetic image, channel 40 image, and what it highlights is areas of late conductivity. So again, where these are coincidental with gravity, which is dense rocks, conductive, hopefully sulfides, and magnetics, these are the areas that we want to focus in on. To the west, or up to the top left of the screen, that is a little bit associated with some salt lakes, but more to the east, which is our northeast project area, these are very distinct and very interesting electromagnetic anomalies that we'll be focusing in on. To the next slide, please. Getting back to the gravity image, we've generated 4 areas and they're highlighted in yellow here. And today, actually, the gravity crew was remobilised back to the site, and we're doing infill, very close space gravity surveys on this area. And these will be combined with the EM work and the magnetics to help us focus in for our drilling programs next year. But very exciting, both of these areas. And we think at this stage that each of these areas are likely to be packages of mafic and ultramafic rocks. So next slide, please. Now, this is an image of Matilda South. Now, Matilda South is the area in the southern of our exploration packages. And this is some early modelling work our geophysicist Steve Massey has done. On the right, in the grey, is the 3-dimensional shapes that he's modelled up. He's of the view that these are highly likely to be mafic and ultramafic rock packages. This is supported in the top right-hand corner by some very shallow drilling done by Goldport, air core hole number 4, where they logged in the bottom of the hole sort of mafic pluton or peroxenite granite type material, which is consistent with ultramafics. But we need to properly drill test these anomalies. They're about 135 metres at the top. The drill hole that Goldport did only got down to 31 metres, so it didn't ever test the anomaly. So we're working up this anomaly now. The detailed gravity is starting there today, and then that'll give us a much better definition for future drilling. So next slide, please. So this slide just shows what we've done. Completed on the left has been these tenement scale wide geophysical surveys. In the centre, we're proceeding with very detailed surveys on the 4 target areas: gravity, magnetics, and ground EM, and that'll set us up beautifully for next year. Next slide, please. But we're already starting drill testing as well. Drilling is starting this weekend. We've worked up about 4 targets from historical data, and the first 2 targets will be tested between now and the middle of January. Next slide. So the first 2 targets I talk about is Jumbuck. Now, Jumbucks are very interesting, and we would hope it sits over ultramafic or mafic rocks. It's a nickel anomaly. It was drilled back in 2011 as part of a gold exploration program, and this was before the Nova deposit was discovered and before it was recognised the potential for the Albany Fraser to host wonderful world-class nickel deposits. 2 metres at the bottom of a very shallow hole at 0.5% nickel, quite significant. Now, we've got 15 holes planned for Jumbuck, up to 150 metres deep. So this will be the first time the underlying rock has been tested at this site, and we're extremely excited about the results from this program, and they'll be coming out in February. Kokoda, a gold prospect, very similar, worked up from historic data at the centre of a very large gold anomaly that was previously decided but never drilled at depth. Next slide, please. Next year, we'll be moving on to some other historical targets. Terra Firma, a 1995 drill intersection, 4 metres at a gram a tonne. In 1995, the gold price was $300 odd an ounce. It's now $1,800 US an ounce, $2,500 Australian. Very exciting target as well, as is Mulga. But Matilda South is the target that we'll be getting into in 2022 as well. And as soon as we work up those drill targets, we'll announce those. Next slide. So very strong news flow between now and April. Very exciting for our shareholders, and certainly going well into 2022. So next slide. There's a team. We're a very small team. A lot of us were part of Placidome's exploration group before it was taken over by Barrick. Tim Moronsky is our technical director. Mike Northcott's in the field now, and Steve Massey. So we're all about exploring, which is what our shareholders expect us to do. Very quick decision making, very nimble, and we just get on with the job. So next slide, please. So very exciting part of the world to be exploring in, very much underdone. So we'd love people to join us in the search, be part of the discovery, and if you don't already, just take a shareholding in Dundas Minerals and come along for the journey. Okay, so thanks very much, Tim.
Thanks, Shane. Can you go back a little bit? You only listed last month. Can you talk us through how you pick up this land and what did you raise in terms of cash for this exploration program?
Yeah, thanks, Tim. Look, it's the actual how we ended up in this area is a story unto itself. But really, Tim Moronsky, our technical director, put the package together. He was directed there by a family friend, a gentleman by the name of Paul Askins, a pretty well-known geologist here in Western Australia. Paul was certainly aware that there'd been numerous anomalies over the years in the area that we picked up, but never been followed up. Western Australia, as you may know, has a magnificent public database of exploration information. We mined that, and that's how we secured the tenements, and they're all 100% held by Dundas. In terms of the capital raising, we were very fortunate pre-IPO to secure about $1.4 million in seed capital. That enabled us to effectively have a running start in terms of our exploration activity when we hit the IPO. We raised an additional $6 million at IPO, but as we came to market, we'd already completed our SkyTem survey, we'd already completed our gravity survey, and we were well on the way to populating our exciting pipeline of exploration opportunities at Dundas, Tim. Yeah.
So roughly $7 million in cash at the moment, or 6 or 7 or something?
No, well, as I said, we're getting on with it, Tim. So our pre-IPO money was deployed to paying for our geophysical surveys, and the money has been deployed to getting the drilling underway. Of course, doing an IPO and raising that first lick of capital, there's a cost to that. So that the treasury at the moment, or the bank balance at the moment, is around 5.3 million, and that will be spent, in the next 2 to 3 years on exploration. Yep.
We've got a question from one of our analysts online here. He asked, triple high anomalies should be easy to spot with new data. Is there another criteria to decide which of the 4 areas should be prioritised, or do you test?
We will test, and one of the methods that's been very successful is ground-based electromagnetic surveys. So that may be applicable, but at the end of the day, it's all about putting the drill holes in. So we'll define the areas. We'll get the most detailed close space gravity, magnetics, and electromagnetics data we can, and then at the end of the day, it's going to be about drilling. But if you go back and look at the Jumbuck discovery, the Jumbuck deposit was discovered on the very first drill hole, which the geophysicists modelled up from the data, and that was a discovery hole. So the advances in geophysics, you go back to 2010, 11, sort of that era around when Nova discovered, then you move forward to now. The advances in both geophysics, but also in computing processing power, have just been phenomenal. And that's what's allowing this next generation of discoveries, below the regolith, below the sand, where people could not look before. And that's what's so exciting about the opportunity, the 1,200 square kilometres that we've secured, Tim.
Great, thanks, Shane. Someone's come through here and said happy birthday, Shane. So
oh no!
Have a nice weekend. You can work out who that is later.
It is my birthday. Yes. Thank you for that.
Thanks for your time, Shane.
All right. Cheers. Yeah, bye, Tim.
See you later. Next up, we have ArchdIS, which has an ASX code of AR9, market cap around $49 million, 1 year return of minus 46%. The company is a global provider of innovative software solutions for the secure collaboration of sensitive information. We have with us the CEO and Managing Director, Daniel Lay. Daniel, over to you. Thank you.
Thanks very much, Tim, and thank you for everybody for tuning in and on this Hidden Gems session. ArcTIS stands for Architected Trusted Information Sharing, and we're trusted to safeguard the world's most sensitive information. Now, that's something that isn't something that we aspire to. It's not just, it's a claim that we back up every day. Some of the software that we have developed over the years is securing the Australian Department of Defence, the Australian Attorney General's Department. It was used in the Aged Care Royal Commission. So it's something that we are doing constantly. We're already doing that. Next slide, please. ArcTIS has had an amazing journey over the last 18 months, and particularly the last 12 months. We've done a number of transformational mergers. We have had extremely great growth in terms of early financial success and validated the market. We've had some marquee global wins from customers, and the products that we are putting into the market, which are niche and have very little competition, have been tried and tested in departments such as defence and intelligence agencies and large multinational global companies. We're very much in the data-centric security technology space, and of course we have those massive strong tailwinds of the cybersecurity expenditure on the back of increasing cybersecurity attacks. Next slide, please. I always think that when you're looking at an strong investment opportunity, particularly in the short, medium term, what you're looking for is market validation, a niche product in the market, huge tailwinds, exponential growth potential globally, but most importantly, what you're really investing in is a team that has done it before. So I'd like to really introduce you to the ArcTIS team. Miles Jakeman, who's on the board, AM, started up Citadel Group and took that to an ASX listing, a $400 million market cap, got taken up by private equity partners, and the most recent valuation of that is it's at $1 billion. Leanne Graham, she worked with the unicorn from New Zealand called Xero Software. I'm sure that most people on the call here understand the size and the success story of Xero. Leanne Graham was the head of their global sales strategy for the Xero pre-IPO and through the IPO and through its great years of growth. Kurt Mufferman, who's joined us through the acquisition of Nuclear Cyber, where ArcTIS acquired the US company, cybersecurity company. We brought in 25 years of technology experience, and he's run $1 billion NASDAQs and a 2 times Fast 500. Our CFO was formerly of Tech One, and we've brought in, again, multiple people with 20 years experience who have achieved dramatic growth in software companies, and particularly in the cybersecurity information access control area. Next slide, please. So that result of the teams and bringing this together just in the last financial year results was an increase in revenue of 740% up to 4.6 million. We had very strong cash on the books at 12.7. Cash receipts were at 7.4 million on the back of some multi-year licensing deals in the Australian Department of Defence. We had just under $2 million in annual recurring revenue. Gross profits were up, EBITDA was down, and gross margins are up. And in fact, on our last quarterly report, they were up at around 71%. So we've got an annual recurring revenue model. It's scaling up. We've invested very heavily in the growth of it, and we look forward to seeing those results over the next 2 quarters. The next slide, please. What's driving the market? Well, the way that we work has changed. We now have this revolution of work from home. We're doing all of these conferences on Zoom. A good indicator of that was pre-pandemic, Microsoft Teams had 65 million daily users. There's now over 120 million daily users of Teams. These technologies were rolled out quickly. The way that we share data is different. We use different applications on the phone, in the enterprise, on our laptops or on our devices. We pick up emails when we're playing with the kids on the iPad. And that this explosion of information outside of the organisation and the explosion of the creation of information means traditional defences just aren't effective anymore. And with that increase in threats by state actors and organised crime, ransomware, we know the ANU was breached, the Parliament House was breached, Austell, Toll, and every day now there is another cybersecurity incident, which are extremely costly and affecting the way that we do business and trust in the digital economy. Next slide, please. What's this driving? It's driving a data-centric security market. Market and Markets predicts that's going to be a $10 billion market by 2024 with compound annual growth rate of 24%. So in the cybersecurity market, we have managed services, we have consulting services, and we have data-centric security, which is a segment of that market. There was $1 trillion of losses last year in cybersecurity losses. That is expected to rise to $6 trillion by 2024, which would make it the third largest GDP in the world. So this is all happening, and it's happening very quickly. So what do? We do dynamic policy enforcement, which is a data-centric security. In other words, instead of building everything into the network, we're building security layers around the asset that is what is sought after, which is the data itself. And we do that specifically for sensitive and classified information. And what we do then is take information about the user, the location, the device, the network, and what data they're trying to access. And we contextualize not only those components, but what information should be released under those risk profiles. So we are automating artificial intelligence for security and access of data, no matter where that travels, inside the organization, outside the organization, enriched by analytics, wherever that goes. And this really is a new paradigm of information security. And that's why it's growing at a compound annual growth rate of 24%. Recently, Joe Biden mandated that for the US federal agencies and asked for a 60-day response plan for implementing zero trust, which is a data-centric security policy. So it's growing very quickly. Next slide, please. We have two products in the market which do this. We have NC Protect, which we acquired in the US, and we also have Cogency. And both of these platforms are very different. NC Protect applies those rules, those contextual access rules, to the entire Microsoft application suite, whether that's in the cloud, i.e. Teams or Office 365 or Azure, or whether that's on-premise. Now, 85% of all businesses use some form of Microsoft product. That's a massive market. Cogency. Cogency, we developed for the Australian Department of Defence back in 2005. It's in its fourth generation. We commercialised that in 2019 and brought it out to the market. It's a completely encapsulated collaboration and sharing platform used for sensitive and classified information. It's accredited by the Australian government. It can also be used on-premise, and in the Australian Department of Defence, it's being used in top secret environments as well as secret environments. That particular platform is targeted at those organisations that are dealing with government that must host classified information and be compliant with the Australian government requirements. We're now getting it accredited for the US and the UK, and that'll be expanding over the next 12 months into those markets. Now, that is particularly important for targeting the defence industrial base. And if you're not aware, the Australian government is spending $273 billion over the next 10 years to uplift Australia's defence capabilities. And in that, there's $15 billion just for information security. Any organisation that wishes to participate in that $270 billion capability uplift, with their mum and dad stores in the manufacturing industry or global conglomerates for defence industries such as Thales, Raytheon, Boeing, Northrop Grumman, then they have to be compliant with that, and we have the industry platform to share that information and give them that accreditation. Moving on. That ability to do that opens us a means for us to secure and expand out of government and into industries with sensitive and regulated data as well, supply chain, manufacturing, healthcare, financial services, and that's where we are expanding and have invested into our sales distribution networks over the last 12 months, and we're seeing great traction there. How are we performing? Next slide, please. Well, we have got a 3-tier distribution network, which is targeting direct sales in government and defence. These are large deals. They take a long time, but they're incredibly sticky. Last September, we secured a $4.2 million deal with the $750,000 worth of licenses in the Australian Department of Defence. We had Cogency in there as well as NC Protect. We cross-sold both of those platforms. We're also targeting enterprises which need to be compliant for privacy, securing intellectual property. That's a smaller size deal. It is rapidly turning over. A good example of that is the large ERP company from Germany, software company which is global, has just expanded us globally through initially starting in Australia, and now has expanded us in Canada, UK, and Europe. So we're expanding our existing client base. And then, of course, we've got the smaller SME market, and we're doing that directly with a Microsoft co-sell arrangement. And Microsoft is taking us into those channels. Next slide, please. We started in December last year. So 12 months ago, we had one FTE salesperson. We now have 12. We have a presence in Boston, London, and Australia. And we have increased our partnership channels by 20. So we don't want to expand that too much. We want to be able to focus on the right partners and make sure that they have opportunities to execute and grow with us, but do have access to the markets that we're targeting. So we have now put in the complete infrastructure to accelerate growth and generate the increasing and rapid annual recurring revenue to make sure that we capture as much of that marketplace as we can. Next slide, please. Microsoft co-sell is important because, and what's important to know about this is effectively we are walking in the door with Microsoft, and Microsoft get quota relief for selling our products. Next slide. Large customer base, big names right across the global territories now. Next slide, thanks. We've been very specific in targeting defence with that $15 billion. We've been very successful. We expect to get more over the next couple of quarters, but we're taking that playbook and expanding that into the US and the UK markets. Next slide. We've been very successful with mergers and acquisitions. We're very targeted. We're not grabbing anything. They have to be culturally aligned, technology aligned, and introduce us into new marketplaces, but also be accretive. And last slide, thanks. So again, proven commercial technology, accredited by the Australian government, global sales networks in place, significant market opportunity in the cybersecurity markets, key strategic partnerships with massive companies, and a strong FY21, which we expect to grow 100% this year in terms of our annual recurring revenue. Thanks. Tim.
Thanks, Daniel. A really impressive story. We've got some shareholders here obviously asking questions, but for those of us who don't know the company that well, why the share price weakness over the last 12 months? I mean, given the big story you're talking here.
Yeah, I think there's a couple of things which have affected us in that space. Back about 18 months ago, the Australian government announced that they were spending about $1.6 billion on cybersecurity when we were all notified that state actors were hacking Australian institutions. And I think that there was a very speculative spike in all ASX cybersecurity stocks, which brought great attention, but wasn't really based upon revenue generation. What we have had to do and what we said we'd always do was invest in the infrastructure and expand that global position. We did a recent raise as well. And I think that we've generated enough interest now and pipeline that we can execute over the next following months. I'm not too sure about the softness. I think that there was great expectation. It wasn't met, and so that it softened up a little bit. But I can tell you this, you know, the deal we did with Nuclear Cyber, they came in on a $10 million acquisition and took pure script. And Kurt, so he's the largest individual shareholders. We have SG Hiscox and others in there, but we're not concerned. We are closest to the business. I'm the second largest individual shareholder in the company, and I have never been more optimistic about the promise of what the business could do. So what would I tell you about the softening? Buy. It's cheap. It is seriously cheap.
There's plenty of cash there, good revenue.
Yeah. So that's what I would be saying. And I think that people are waiting for that J curve growth that we have been predicting, and I think it's around the corner.
And can you give us a little bit more color on your relationship with Microsoft? It's obviously a big name. I would have thought they'd have their own sort of software in place here to provide that sort of protection, or is that you collaborate with them? I mean, I would have thought they'd look to buy you in the future.
Tim, that's an excellent question. So there's a couple of things there, I guess, that's important to note. Microsoft developed products for mass market. Okay, what they don't do then is niche particularly well. But what's happening with the threats of the cybersecurity world is government have been placing increasingly greater security requirements across dealing with their sensitive and classified information, and so is industry. What we do is very niche. We provide very particular granular access controls which travel with the data, and they're behind in developing anything like that. In fact, When we were introduced to Microsoft, we had to go through 6 different tests to prove that our product didn't upset any of their platforms. And when they saw it, they introduced us directly to Microsoft head office, and they've been walking us through the door in the US to the US Department of Defense and government. We've now been walking through the door in the UK. And this is a bit, for us, it's a bit frightening because, this doesn't often happen. Microsoft, everybody in the world wants to partner with Microsoft. So when they take you under your wing, you've got something special. But at the same time, you need to build up your distribution network to be able to successfully manage the growth and deliver to the expectation, not only of Microsoft, but to the client base. And that's what we've invested in. So we think we're in a very good position now to move forward. If we are successful, yes, why wouldn't you expect a knock on the door? Why wouldn't you expect there'd be, and we have had interest from other parties, but we have never thought that we were in the best interest to return that value back to the shareholders, particularly at this soft price. So again, I'd be buying. So, but
well, let's leave it there. You've got a couple of other questions there. If you don't mind just going online and answering those, that'd be appreciated, Daniel.
Right, fantastic. And I wish everyone a Merry Christmas and a happy holiday season. Thank you very much for giving me the time.
Thanks, Daniel. Thanks for your time. Good luck out there and have a nice Christmas. Next up, and finally, we have Prospect Resources, ASX code PSC, market cap of 278 million with a 1-year return of up 364%. The company is a battery minerals company with a focus on lithium in Zimbabwe. We have with us the Managing Director and CEO, Sam Hosack. Sam, over to you. Thank you.
Yeah, Tim, thank you and welcome to all your guests and a great opportunity today to present on Hidden Gems. Prospect Resources, we're an African-focused and lithium-focused business. And my name is Sam Hosack, and so it's a great opportunity today to take you through Prospect Resources and what we've been doing this year, and certainly what we're expecting to do in the next period. So, next slide, please. Listed entity, PSC ticker. Please have a look at our website. Please have a look at our disclaimers. Prospect Resources at a glance. Prospect Resources has the Arcadia Lithium Project. We're an 87% shareholder or owner of the Arcadia Lithium Project. It's situated in the just due east of the capital city of Zimbabwe, which is Harare. It's fully permitted. It's got exceptional low-lying near-surface geology, which leads to a very low cost of production, very competitive. The products are also, again, a function of geology. They're low impurity, so they're a high purity product. We produce products that go into the battery minerals market, and we will produce products that go into the technical lithium market. So there are two markets. They make up the 100% of the sort of consumer base for lithium products, and we're in a very competitive position where we can target both those markets. And one's got exceptional growth potential, and one's got a very mature and stable, diversified, broad consumer base. So we're in a very strong position there. Over the course of this year, Prospect has produced a pilot plant. We've installed it. It's been a proof of concept, and it's allowed us to produce so far over 200 tons of technical grade products, which we've shipped predominantly to the European customers. So the technical market is also called the glass and ceramic market, where lithium products are extremely highly valued. So the other aspect of our focus for this year has been a clear de-risking strategy to take all the known and controllable manageable issues and risks around our mining business. And we've partnered with Lycopodium Minerals, and we've targeted them to come up with two feasibility outcomes. One is a staged approach, which is a very conservative approach, and you build a smaller plant and expand it using cash flow generated from that plant. And the second part of the DFS, which is certainly a lot punchier, is to go straight to a full-scale operation. So we've released the first DFS, and we've got the second pending imminently. And lastly, we've been running a very sophisticated and competitive partnership process, which has originally considered to raise the capital cost and fund the requirements for our project. And we've been through a number of gates, and we're in the final stretch now. But we did receive 7 non-binding proposals. They're very competitive. They were very pleasing, and there was a range of proposals in there which we are now adjudicating on and progressing. So that's Prospect Resources at a glance. Next slide, please. The Arcadia Lithium project is situated just due east of the capital city of Harare. So from a project development perspective for a junior miner, we're in a very, very fortuitous position. We've got good access to resources, particularly people to the east, and to the north, we've got an interconnection with the major east-west running hydroelectric interconnection. So big hydro plants, lots of access to energy around 10 kilometers north of us. And to the south of us, a dual carriageway exit to our preferred port, which is Baira. So very close proximity to all our key infrastructure and resources. We've also been very fortuitous in applying for and having the, should we say, the credibility and the meeting the credentials for a special economic zone license. So this is the apex investment incentive within Zimbabwe, and it certainly comes with a raft of economic but also policy measures which are very attractive to all of our 7 partners that we're speaking to in our partnership process. We are fully permitted. We're working very hard on our feasibility, and the focus towards the end of this year will be to complete that feasibility, get that feasibility into the market. That feasibility has been shared with our partners, for which we've shortlisted now, and that allows has given us the confidence that our straight to 2.4 feasibility study, which is underway, is by far the preferred pathway. So it's very pleasing. We've been obviously working on this for about a year. Managing risk has been a key focus for us, and we've received a huge amount of support for that. So next slide, please. Zimbabwe is very much on the rise. That's evidenced not only by perception, but also by the experience of all of the, shall we say, our peer group or competitors within the country in the manufacturing and extractive sector. There's year-on-year growth, which is very competitive within the region. We've seen good policy stability. We've also seen good government support, and we continue to share a very strong relationship with the Ministry of Mine and the Zimbabwe Investment Development Authority. Their mandate is to make that investment opportunity into Zimbabwe for any investor like Prospect Resources as straightforward and attractive as possible. So we do get very good support. The government of Zimbabwe is mandating or targeting a middle-income economy by 2030. So their growth prospects and their viability as a government is dependent on them really increasing the capacity and production base in the mining sector, which is the predominant foreign currency earner in the country. So yeah, Zimbabwe is on the rise. It's got a long history of mining. It's certainly had its difficulties going back 2 decades, but Zimbabwe is very highly prospective in lithium minerals, platinum, group metals, gold. There's over 1,000 registered miners. So we feel we're in a really great locality, and we're also situated, very conveniently relative to our inputs. Next slide, please. Our development pathways have always had to navigate the balance between being conservative and being really ambitious. Last year, the lithium carbonate pricing and general market for lithium products was quite weak, oversupplied. In sharp contrast to this year, where the supply-demand gap has really opened, and we can see now that demand isn't going to be met by the production base for the imminent future, probably at least a decade. So we've moved very quickly from being conservative to being very ambitious, and we've got a very clear but still essentially a conservative model on going straight to 2.4 million tonne per annum. So we call that the direct pathway. It requires more capex, but we're in a very strong position within the equity markets. We're in a strong position within our commodity and Prospect Resources has also managed a lot of its risks, which had been an impediment in the last 2 to 3 years. So we're in a strong position. Next slide, please. One of the key rationales that we've been trying to focus our investors on in the feasibility is really trying to balance the sort of market outlook for the production of lithium products. Had it been more conservative with lithium carbonate in a weaker pricing model, we would have probably advocated for a multi-stage approach. But as we've come through the latter part of this quarter, we're abundantly convinced, predominantly through our discussions with our partners, that the model going straight to 2.4 million tonne per annum, which is now being finalized by Lycopodium. It's an independent feasibility study. So we think we've timed it perfectly to coincide with trying to complete our partnership process and the project funding. And next slide, please. So the pilot plant has been a really major shift change in our confidence and our management of our risks. We've managed to produce quite high volumes of samples, so 200 tons is, in our development stage, they're high volumes. We've managed to meet the very strict and quality criteria. We've managed to demonstrate to our investors that building a project in Zimbabwe is very straightforward, that we, the team in Zimbabwe, have had the capability to develop this project. And we've also, importantly, we've done it very safely. So our transition from being an exploration business to being a developer is well advanced, and that's been evidenced by through the pilot plant operations. Next slide, please. So finally, to talk really specifically about the feasibility, we had a 20-year life of mine, and this is for our staged approach. This is going to change very soon when we come out with our direct model. So it's a great life of mine, 20 years. We were looking at a capex of stage 1 of $140 million, which would fund and develop the stage 2 within a 2 to 5 year period, and would be producing around 135 plus 1,000 tons of spodumene per annum, and around 107,000 tons per annum of low-grade technical petalite. So really strong fundamentals, even for a very conservative staged approach. So we've proved that this project has huge commercial capacity, even at a low conservative model. Next slide, please. The lithium market has really taken off this year. There's been massive supply chain challenges, which some of our other presenters have touched on, but really the lack of investment into the production base of lithium minerals is to blame for the bottleneck in producing batteries and battery products that go into the electric car and personal device growth. So as we see, particularly EV and predominantly in Europe, a massive upswing in growth, we're going to see year-on-year supply gaps for lithium products. So in terms of timing for our product, our project and our products, we couldn't be better suited. Yeah, good timing. Next slide, please. We do have 2 offtake partners for each of our different types of products. So Sibelco into Europe, they've been supplying technical grade products, particularly petalite, which is one of our 2 key products. They've been supplying it into that market for over 40 years. That market makes up about 15% of all lithium consumed. So it's a very busy market, broad production, consumer base rather. And we also see some great tension between the 2 markets, which is the technical market, EV market. They're both fundamentally seeking lithium carbonates. So as the EV, should we say, upswing in demand takes off, we're seeing a scarcity of that lithium carbonate availability for both of our markets. And so lastly, we also have Sidermine. They're based in China. They have acquired Dongpeng, which is a hydroxide producer. So again, we've got 2 offtake partners. Around 80% of all of our volumes for the first 7 years are pre-sold. So also a very strong sales position. Next slide, please. Petalite is our key product that we like to talk about. I think our two products are petalite and spodumene. Spodumene being abundantly produced here in Western Australia. Petalite is far more scarce, and it has traditionally only been produced by one major producer, and that producer, after 40 odd years, has come to the end of their commercial or productive life of mine. So we're now in a very strong position within this specific market where the supply is coming off, and that market is accustomed to petalite. It favors petalite. It pays a premium over petalite. And so whilst petalite in its general form is considered inferior to spodumene, it actually attracts higher pricing than a typical spodumene product. So yeah, very strong market, quite a niche market, which is in our favor, gives us a good competitive advantage against our broader hard rock peer group. Next slide, please. So just to wrap things up and to summarize, we have the Arcadia fully permitted world-class asset in Zimbabwe. We have a pilot plant which is producing technical grade products, showcasing our capability. We have a really low-cost product, therefore high margin business model, high purity products being the fundamental strength of our balance sheet. And we're expecting the feasibility study imminently, which is going to underpin the final push on our project funding initiatives, which we've been focused on. So thank you very much for your attention.
Thanks, Sam. Couple of questions here. Is the key to kind of full funding of the project, and you've had some off-takers, does that mean you're going to look at debt and equity or further off-takes or a JV with an off-taker? Where's the funding going to come from, and what are your conversations to date? I mean, obviously, some of these players are talking to government credit agencies and the like. So can you give us some more colour on that?
Yeah. Look, there's quite a few opportunities for funding. Debt and equity are obviously the more classic format, and we're awake to the idea of how that could generate value. The real interest and where the real tension that we're leveraging and benefiting from, the real interest lies in the supply chain. So we've got major capacity in China and look sort of aspirations in Europe to produce these lithium products and to meet the future needs of the battery minerals consumers, particularly vehicle manufacturers, and to sort of underpin their businesses. They need to put their hand on supply. They need to be able to demonstrate to their customers, being the OEMs, that they have secured supply. So really what we're seeing in this year in particular is a huge amount of M&A activity within our sector, particularly the hard rock. So that's where the real tension lies, and it's in managing that tension successfully that we think will get the best outcome.
And lithium is obviously a key component of the lithium-ion battery, which is, we're talking about the clean energy transition here. You haven't mentioned your kind of ESG principles. So some of those OEMs are looking the whole way through the battery chain in terms of getting an understanding of the key components. Can you give us some more colour on that? Sure.
Yeah. Look, certainly carbon and water is fundamental to the ESG complex. Socially within the country, we've already established a very strong ESG or CSR type impact. So Zimbabwe is really a sort of country where education and healthcare provision, food security, etc., can have a major impact. So socially, the more important of the three ESGs, we feel we've got the highest impact. In terms of environmental, again, carbon and water, we have an abundance of surface water on the property, and using that water for our production, the fact that we don't discharge any chemicals in our water effluent, all of these have a very high impact on our ESG credentials. And lastly, being interconnected to the sort of east-west power infrastructure running between two hydroelectric projects puts us also in a very favorable position. And we're planning to come out with sort of a more categorical explanation of where our ESG stands on carbon and water. But from where from our observations on site and certainly our corporate culture, key focus on ESG and CSR. Yeah.
And 2022, what are the key milestones you're looking to achieve?
Yeah, looking to the end of 2021, we've previously stated to the market that we'll produce the final feasibility for the year, which will be the straight direct feasibility and the core model underpinning our future. And the second thing we've told our market is that we'll complete project funding. And this is a very tight time frame, but we're very confident about meeting that time frame.
I mean, that funding, obviously the environment very much suits a lithium player in this market compared to, as you mentioned in your presentation some years back. How has that changed how have those conversations changed over the last 12, 18 months or so?
Yeah, they've changed diametrically, quite honestly, from us leading conversations for the last couple of years to us having to appoint an advisor to manage all the inbound interest in the sort of mid period of this year. So the intensity of activity has been exponential comparative to last year. We have obviously expected that. We expected it last year, but COVID pushed a lot of that activity back. And we've been ready. The main thing we've been getting ready with is getting our technical knowledge set of the project through Lycopodium's involvement. Having that watertight has been transformational.
Great, Sam. That's all we have time for. Really appreciate having you on Hidden Gems webinar. Love to get you back on next year and follow your progress.
Yeah, thank you. And season's greetings to everyone.
Agreed. Thanks for your time. That's all we have time for in 2021. That's the end of Hidden Gems webinars. We'll see you back Friday, January 21st, 2022. See ya.